Okay, I think I'm back testing 1 2 1 2. Sorry, the network did something there. I have no idea. Can you hear me though? Testing 1 2 1 2.
Yes, sir.
Okay, thank
I
you.
can hear you clearly from my side.
Yes,
All
we
right,
can.
yeah, something wrong with the network. Keeps on saying it's unstable. All right. Any
Yeah.
currency pair? Let's do zone to zone. Currency pair, anybody?
GBP USD.
GBP USD. Okay, let's do GBP USD. Let's do GBP USD. And let's do GBP USD. Do I have any drawings on this one? Okay, this one. Let me just find a clean one. Right, I think this one is good. Okay. Yeah, okay, let me just remove these. Remove drawings. Okay. So how are you going to identify? This is arguably one of the easiest way to identify, support and resistance, or those key, turning points in the market, or those psychological price points in the market. Like I said, there are many ways you can go about it. All you have to do is identify an impulsive move in the market, measure its range, and then work with the range that you've identified, be it to the upside or to the downside. That's why we call it range to range. The market, every time frame has got a rhythm to it. Every time frame has got a rhythm to it, be it 30 minutes, 1 hour, you name it. Okay. So I just want to see, let's measure from here, I think from there. Let's use a, solid line. Would you say this is an impulsive move from here to there? Remember, an impulsive move, the most dominant, you're going to have a dominant color there. I think that's one of the easiest way to identify it. It moves by quite a bit of, momentum in a particular direction, and the color is quite uniform. So we have from here to there, I would say we have more green more than anything. So let me mark it out, something like this. Now, see where it starts and it stops. It's not by coincidence. It has happened here before. So now what we do is we're going to measure this range so that we know where we're going, whether we are selling or buying. Come on, this thing is doing its own thing. I'm gonna measure it from here to there. About 193 pips. Okay, from here to there. So if I'm bullish and I've had a violation of this price point, say maybe 1 hour, if I want to see it clearly, violated, closed above, I would say if I wanted to enter at this point and I wanted to know where we are going, I'll put my range here, come and put a solid horizontal line there. Okay, that's where price is going. That's how you can identify your next TP level. If you go back to time, that will help you give that level of significance. If you can find it acting as resistance in the past, and you can see the same thing happening or similar thing happening over and over, that's definitely a significant level. Okay. I think I may have gone a little too high, but you get the point. There it is. There it is. Okay. Go back as far as you like. When I'm really that bored or I've got too much time on my hands, I'll go back even to the early 90s. Is this making sense? Hello? Anybody?
Yes.
All right, that's a weak yes.
Yeah,
Weak. Is
Yeah.
I always say,
So
no knows. I always say, if I can't impress
I
you.
check something.
Mm-hmm.
Can I check something level?
Uh-huh.
The next level, you saying like determining where it's going. Are you saying the next level would then be the next resistance level?
Yes, if I'm
Is that
bullish,
what you mean?
then the
Yeah.
next resistance level will be 1.34. And we've given that level significance because we see the historical pattern, right?
Okay.
We have seen it act definitely as resistance and support in the past, that particular price point. Same, I've just measured, remember initial start, we were here. We measured that impulsive move from here to there. We measured it. There it is. We took it, we said if you're a bull, simply take that measurement, put a horizontal line, that's where you're going as a bull. If you're a bear, take it, go put it below, right? There it is. There it is. There it is. There it is. It's like I've been saying, the market is one big song on replay, right? What happens today, tomorrow, next week, it's not entirely new. It has happened before. You follow? Can go back as much as you want. We still, I mean, it's just, this is only last year, June. You can go back year on year and go look at that price point. Okay. Let me reset. I feel like you're hearing me, but you're not understanding me. I'll illustrate it one more time. There it is. Now, it's not going to be an exact science. Okay. But there it is. 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 Need I say more?
Nope.
Okay. I think when we got cut off yesterday, I think I was still at that point of not knowing how to, like, it is so clear, like on the 4-hour time frame, that a level has been violated. So it has pushed through, but we know it's gonna revisit uncle again at some point. But now what I don't know how to reconcile what I see on 4-hour to what's happening at a lower level minute, like 1 minute or
No, no.
5 minutes.
1 minute. No ways. Play far. You're gonna confuse yourself. I want you to work with your, because you're struggling with that. Work with your 4 hour, 1 hour, and if you have to go any lower, 30 minutes. And what all it is you can see the violation, right? Fine.
Yeah,
On the
yeah,
1 hour, you want to see price, there it is. Because all this is that 4 hours, few of those 4 hour candles going up. This here,
it's
this here,
retracing.
right? It's retracing. Thank you. How can I make this out? How can I shade it? This here. That one worked for me. Let's try this box. Right here. Right. So we can see definitely a violation.
Yeah.
1 hour. There's the violation. Up, 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 down, down, down. That's your role reversal. Your entry is supposed to be there. Now I always say, for some odd reason, if you're still unsure of yourself, what should I go in? Is it really going to hold? Nobody really knows, right? But you're working with a clear set of rules. This must happen. This must happen. This is my entry. You have no control of whether it's going to hold or not, right? But that's where you come in, and you should have a premeditated stop loss for it in case it doesn't hold. So when you actually realize loss, it's loss that you've already priced in. You know about it. It's not surprising. You're not gonna have sleepless nights over it, right? Some might say, okay, I need more information. Some I say, well, you can look for an entry signal at that point. Could be a candlestick wick rejection. It could be something like this. Where's my pen? Pen, where are you? Could be a candlestick wick rejection, you know, small, long tail, small body at a key level of support. That tells you a lot. Candlesticks, you know, tell you a lot. Tells, what is it telling you? There was an attempt by bears to push below. They lost, you know, that momentum. Not enough of them. We closed with bulls in control. So that's a signal. Some might want to see, or sometimes it might be a signal like this. My candlesticks are not the best, but you get it. What type of pattern would this be? This one here. You're engulfing, right? Your bullish engulfing pattern, right? That's also another signal for a buy trade. Okay. So that is one way of reconciling. What you see as a violation on the 1 hour, you then go and switch to a lower time frame, say 1 hour, there it is, up, down, down, your entry, and you go with it. Any question?
Okay, that's clear.
Yeah, let me know. I'm going to give it to you so many ways, like you will eventually get it.
Yeah, I think I was confusing myself with the lower time frames, like 1 minute, and now wondering.
Yeah, no, 1 minute is a lot of noise.
Yeah, okay.
You're stepping into a casino, you know, there's a lot of machines. That's what's going on. That's 1 minute for you. You really need to be prepared for it. Everything is high paced. Remember, we did top-down analysis, guys. You know, we've got the 1 minute all the way to the monthly time frame, right? And we said we described the environment, how it feels up there. This is much calmer, right? Yeah. This is
Absolutely.
still directorship 1 hour. You can understand what they're saying. Those people speak much slower, much more calmer. They're clear in what they're doing. Their intentions are understood, right? So stick with the executives here. 1 hour for your entry, right? Does that make sense, ladies and gents?
Yeah.
Okay.
I've suffered for long with that noise.
Suffer no more. Suffer no more. Alrighty. So zone to zone, are we okay?
Yeah.
Zone to zone.
Thank
Right?
you.
It's a very easy way of identifying those key turning points in the market. So and I sure there are tools out there that you can use. But I want you to be able to train your eye to pay attention to detail, to be able to find those turning points on your own. And one of the easiest ways is to do this. Okay, zone to zone. And you can go and do it on any time frame. So this range is fine for our 1 hour. We can find a different range on a 15-minute time frame, let's say, right? On a 15 minutes time frame. Let's see if we can find one quickly. Okay, we've got an impulsive move from here to there. Don't know if it's quite done, but we'll measure it. But then, of course, the levels that you identify on one time frame must not appear on the other. It's just going to look like one big mess with a lot of horizontal lines running across all these time frames. So what you identify as the rhythm for the 1 hour, let it appear only on the 1 hour. And maybe even if it still makes sense on the 4 hour, then yes. But then, are you getting what I'm saying? It needs to be neat. Yeah. Keep your charts neat so that it makes sense, right? Oh, there we go. So you can see we bounced off. We had a bit of a liquidity grab, but there we go. Reacting to the same spot. Let's see. It's this one here. There we go. Same thing. That's on the 15 minutes. So you can identify a rhythm. Every time frame has got its own rhythm. It's up to you. Do you want rock and roll, which is your 1 minute? You can find the rhythm there, right? Everything is just you know those rock and roll clubs. Yeah, everything is fast paced. Or do you want your jazz clubs, which is nice, calm, you know, cool? All up to you. Any question?
No, it's clear. It's clear.
Nice and clear. So now, here's another thing. There's always a question of the egg and the chicken, which came first. Nobody will really know. And then it brings us basically to liquidity zones. If you work with a specific price point, I would say 7 out of 10 times you might be disappointed, right? What do I mean? You give me a sec. Sorry, I'll be with you just now. Alrighty, sorry about that. So if you only focus your attention on a particular price point, your pending orders in some cases, or just your entries might not, are going to be missed. Let me put it that way. So you have to work with a range of price and not a specific price point. You have to work with the range. I'll make an example. Let's zoom in into this picture here. So, like I always say, your levels won't be an exact science, but we've got this price point. We've seen it. It's, you know, let me go put it on the 1 hour. It's definitely a significant level of resistance in this case. Now, let me just adjust it ever so slightly to here. So just by doing that, the argument or the question usually that arises is, why not here at the end or at the tip of that wick? Does somebody have an answer? Why there and not here? What do you acknowledge? What's more important? The body of the candles or the wick?
I think from what you said last time, it's actually the wick that touched the price.
It's
That's
actually,
what I think from what you said. I was disregarding the wick, but then after what you said on the about the gold, it said it touched 26, but that was the wick that touched the 26.
yeah.
Not the whole candle. So now I've got a different understanding. I was disregarding the wicks.
Oh, no. Definitely do not. Because like I always say, candlesticks will tell you your story, you know. Price has been there. Whether it did not close or stay above there, but it has been there. Right? So we have to give equal importance to the wick and the body of the candlestick. And so how we go about doing that, of course, we're going to shade the entire area. Take our shaded area and mark it out like that.
Okay.
Okay. So now we know Because normally what you do is if you don't acknowledge the wick, just remove it for now. And you say, okay, this is where I'm going to enter. Where is your stop loss going to be? Sometimes it's going to be somewhere in between your body of the candle and the wick. And in fact, your stop loss needed to be above the wick. Right? It needs to be above the wick. This entire area here, starting from the candlestick body to the tail or the wick, that is what some will call your liquidity zone. What do others call it? Order block. You know, there are many terms for the same thing out there. Essentially, I've always been used to call it a liquidity region. This is where I expect that battle of the bulls and bears to be. This is where all those orders are likely going to be, right? So this is where direction will be determined, depending on how many bulls and bears are present at that point. So if I was looking for a sell, my my pending orders are not, or that pending orders is not going to be one at that particular price point, this one. When I have a couple, maybe two or three, right? I'll have those there. Does that make sense? And my stop loss needs to be somewhere up there. I need to give myself room for that turbulence to take place. So I'll expect something like this. Okay. If I am a bear and I've got pending orders, that's what I would like to see. Even if it's one trade, one pending order, still fine. Right? But my stop loss will be above that wick. Any questions on our liquidity regions or order blocks?
No, I think it's clear. It's clear. Understand.
Alrighty. So that's why you'll see I don't only just rely on just a static horizontal line. I like to shade out certain areas and I expect price to dig into them before maybe coming down or dig into them before eventually pushing up. Okay, now let's move on. Like I said, I'll try not to hold you. The energy is extremely low today. The vibration is not there. Risk management. Risk management. Should I talk about risk management? Let's see. Yeah, why not? Why not? We spoke about pips the other day and lot sizes and leverage. So let's talk a bit about risk. I don't know how to, let's see. How should I do it? How should I do it? Okay, let me try and engage you. You've got $100 account. That's your capital. How much are you going to risk per day? Or per trade?
2%.
2% of $100 is how much?
That's $2.
$2, right? Okay. Is that per trade or per day?
Let's say per trade.
Okay, you're gonna risk 2% per trade. And then, which is $2, right? Let's put it here. All right. What's your maximum threshold for the day? How much are you willing to lose per day?
I put at $6 at 6%.
$6. 6%. $6. So basically 3 trading opportunities.
Yeah.
Once again. Sorry guys, I've got a runny nose. Don't know what's going on. Okay. How many of you do actually stick to that? Confession time. The Lord shall forgive you. You know, many of you are not, right? We would like to practice that, but many are not,
Yeah,
right? Many are
it's
not.
a lot.
We are emotional beings. And if there's anything that I've learned about trading is it really teaches you a lot about yourself, patience, etc. goes on. It builds character, I must say,
That's for me.
because there's only one person to blame if nothing works out. It's yourself. It's not your sister who did this something to you 10 years ago, or the lack of your father's love. No, it's got nothing to do with that. It's all on you, this one, right? So we are quite we have to really learn how to be disciplined in this one, and we can learn it all, the fact, all the jargon, monetary policies, fiscal policies, this, that, geopolitical risk, all of those things. You can speak the lingo and it won't matter if you don't manage risk. It's all pointless. So at the end of it all, actually, what I'm saying is you can be the worst trader, okay, with a 70% loss. In other words, a 30% win rate,
Right.
10% win rate, and still be able to walk away with profits in trading. But you have to understand risk management. For you to enjoy longevity in this one is risk management, right? So I don't have any complex way of approach when it comes to risk management. It's extremely simple, right? Fine if we're risking 2% per trade, 6% a day, which is $6. We've got 3 trading opportunities. How do you think that those 3 trades will go? Are you gonna lose all 3?
Possible.
Possible, right? It happens all
I
the
think
time.
that I think that's where we still are. We still are at that level where you're losing more than you're gaining, you know.
And
And for me, sometimes it's because of entering. I think it's for me the biggest issue has been not
entry.
getting the timing of, like, now it's getting clearer as we're talking, as you're explaining, like where the entry. I think
Yeah.
that's where I've been, struggling a lot. Trade leaves and then I get it towards the end, or maybe when it's about to change direction.
Yeah.
Some-
No, we lose
yeah.
trades for multiple reasons. Like you say, it could be premature entry or late entry. It could be multiple things. Sometimes, my entries, the above mentioned, and incorrect lot size used. Sometimes I'm just daydreaming. I thought I did 0.02. Meanwhile, I did 0.20. And I'm like, oh, shucks, hold on. So I have to quickly make a decision. Hey, close this thing and not hope that it's going to go in my direction because I didn't plan for that. Then I'll close. And, so that will be definitely a loss. Sometimes, of course, it will just play into into your favor. That's you don't want to write it like that. There are various reasons why you might lose a trade, and you're going to lose countless trades. That's the nature of the game. If you're going to fight, to try always be right, it's not going to work out. That's how you blow accounts. So always determine your stop loss from the get-go, right? Measure, those pips from your entry to where you think if it goes wrong, this is where I will know that it has gone wrong. Like I was saying earlier, let me just remove this with this point here. Said if we want to sell, my stop loss would be up here, right? It's up here because, well, surely by the time we get here, it should be clear and evident that no, bears have lost control. Maybe I might even push it higher, midpoint. There's no way I'm delusional or confused at this point that bears are still in control. We are halfway there. You follow? Okay. So, and you definitely need to determine if there's anything, spend more time thinking about possible losses and not profits. So profits already, that's a given, right? You have to understand your position sizes, right? Your position sizes. How can I put it? All right. Okay. Position size, let's say, like we did the other day, you need to understand if you are risking 30 pips, because you need to know if you're putting your stop loss here, how many pips is it? Measure that range and understand the lot size that you're using. How many pips is that? Okay. Now, when you go to your trading account, MetaTrader 4, most contract sizes are 100. Is it 100,000 units? Let's quickly switch to MetaTrader so we can confirm that. Okay. What are we on? Euro USD. Market watch. If I can find it. Euro, is it? Euro. May have passed it.
Right on top.
Right on top?
Yep.
Okay.
For GBP USD.
Oh, yeah.
Yep, that's
Thank you. So we right click, we go to specifications. Most brokers, normal brokers, will probably offer you a very similar thing in terms of contract size. This is 10,000. I meant to say, yeah, 10,000. That's the contract size, right? Some might say, some might be maybe less, right? So you need to understand how to measure that. I'm trying to remember the easiest way I can show you how to do that. I'll come back to it though. It escapes me for some odd reason. But you have to understand that. You have to understand what your contract size is, right? And then secondly, which will be much easier, is the following. I want us to play those scenarios a bit, which is still your risk management. So we said $100 fine. We're going to risk our 2%, which is $2 fine. That's what we're risking. What are we targeting if we're risking $2?
$6.
$6. So that's times 3.
Yeah.
Almost put it in rands. Now, what's the risk reward ratio there?
1 to 3.
1 to 3. I see a lot of traders, they entertain these 1 for 1 or 1 for 2. Avoid them, right? Avoid that. It's not worth it. risking $2 for $2. In fact, you know that you're not. You risk $20 for $2. That loss gets so big, and then eventually, when it just gets out of loss and gives you a positive $2, you're the first one to take it. I'll take it, I'm out, because your brain is registering pain. So in fact, your risk reward ratio is extremely skewed. You are not risking 1 for 3. You're risking 20 for 1. Okay, so be mindful of that. Always risk a minimum of 1 for 3 when it comes to your risk reward ratio. Alrighty. Now, if you've got 3 trading opportunities, because you're risking $6 for the day, already with the first trade, if that trade goes well, you're in the clear. You've got a much more trading opportunities. Does that make sense? Let me put it this way. First trade, let's say you lose the $2. Ne? Second trade, you lose the $2. Last trade. Last trade, you turn your $2 into $6, because your risk reward ratio is always 3. 2 for 6. Oh, sorry, the writing is bad. So for the day, are you in profit?
Yes, yeah, profit of $2.
Exactly. But if you've got a risk reward ratio of 1 for 1, you're not going anywhere slowly. Right? So always be targeting favorable risk reward ratios. I mean, I don't know how else to put it. If you've got, let's say, if you're giving yourself 5 or let's say 10 trades, 10 trading opportunities, let's say you've got 10 trading opportunities, and you lose, and you're, by the way, you're using a risk reward ratio of 1 for 1. You lose 5 trades, you win 5 trades. Many tend to think they break even. In most cases, not. You're actually in the negative. You follow? You are not actually breaking even. You are actually in the negative, right? So that's why risking that risk reward ratio is not the best. But if you use a risk reward ratio of 1 for 3 minimum, I mean, you could be literally, how can I put it? With a 30% win rate, you're still making profit.
Yep.
Is it making sense, ladies and gents? Or do I need to maybe revisit this in the new week?
It makes sense for me. I don't know for others, but
Because it's awfully too quiet. It's awfully too quiet. No, let me come back to this in the new week and say it one more time, because it really needs to make sense so that you can practice it, right? I guarantee you, I promise you this, if you do this religiously, you will always be okay. It doesn't matter how many losses you incur, you will always be okay. I think let me close it off with this point. Let me not go further because, like I said, another thing to consider when it comes to risk management is not only capital preservation, but it speaks to capital preservation. It's tithing. I'm not talking about the tithing that you're thinking of. I see you're touching your screens. Hallelujah. Yeah, I can see people are touching their computer screens now. Like, hey. Okay, this tithing is close to that one. But what it is, you have to think about it this way. Okay, fine. This is something that used to be a big bother for me. So let's say, I've moved my account. It doesn't matter what the capital is. Okay, fine. Let's say it's still $100. Okay. Now let's say I've made, hey, let's say I've made $40. I've made $40 and it's what time? We're just about to go into the New York session. So South African time, we trade, the London and the New York session. We've got that advantage, right? So by the time we get to the New York session, I'm $40 in. I'm in profit, right? Capital still intact. So basically 140. I think we are all on the same page with this one. Now, but by the end of the New York session, I'm no longer sitting at 140. I'm probably sitting at like $70. What happened there? I've lost my profit and my capital has taken a knock. So it used to bother me and it used to happen a lot. Why can I be so profitable in a particular trade session when I get into the other one, lose money? What's going on? Something psychologically is not all right there. So I started implementing the tithing system. I said, okay, you know what? Whatever profits that I make within the New York session or in any session, by the way, okay, I need to tithe some of those profits. Well, if need be, not I need to, if need be, there's a percentage that I need to tithe. So let's say I'm $40 in. What I'm saying to you basically is I need to have a budget for loss. Not loss on my capital, but loss of profits gained for the day. Okay? So if I've made $40, let's say my tithing is 10%. Right? Okay, let me maybe put it in percentages, or let me say, let me simplify it. Let me just say $10. I'm not willing to lose $10 of my profits. So as I execute my trades and I start to incur losses, I lose the first trade, it's $2. I lose the first. Second one, maybe it's $4. Lose the other one is $5. When I get to $10, I'm out. I've given back enough to the market. I am out. I've lost all my trading opportunities. Because usually what happens is when you make that losses, you want, now it's, let's imagine, I mean, you've had a fantastic day. You've been at it. Just before you call it quits for the day. Now and also this speaks to your, of course, your trading psychology, because if you don't know when to stop, you start to think you're invisible. You seem to think that you know what you're doing, right? And so what do? When you become overconfident, your confidence overshadows your risk management, and you start to take on more risk. And you say, now let's go a bit harder now. Let's not use 0.05. Let's double that. And then within 3 or 4 trades, you've lost your $40 profit that you've made for the day. And then you say, shucks, it took me the whole day using 0.05, and then I decided to use 0.10. Now I've lost all that. So what does that mean? If I'm going to use 0.05 to regain those profits before I sleep, I mean, I want to sleep, then that means I must do what? I must use 0.010 or more to try and get my profits. So now it's revenge trading, and the lot size, the risk management is completely skewed. It's not even used anymore. You follow? You're not even using it. And that's where now, not only is it your profit that's being lost, it's also your account. And then that's where you become depressed. So have a budget for how much you're willing to tithe back to the markets. Once you get to the point, you're out. So that you definitely do take away profits and sleep with a smile and be able to go and do it again the following day. Any questions? I'll leave it here.
No, it's clear. Clear.
All righty.
Me, I want to appreciate you, sir, because we're talking long term. The problem is this thing of flipping accounts. We are we are having problems with the issue of flipping accounts. So this is very constructive. I really appreciate this content because it talks about long term in the market.
No, thank you. Thank you so much. Thank you so much. Right. Really appreciate you guys. Thank you. Thank you for that feedback. Thank you. Thank you a lot. I think let's not drag it on and on and on.
Yeah, before we go,
Yes.
one more thing. What
Yes.
you just explained now, does it does it advise the next day?
Does it apply in the next day?
Yes, like let me say for instance now you have $100 account and then today you made like $10 and tomorrow you're going to the market and do you still need to be cautious in a way and put it that way?
If I heard you right, yes. So now let's say we lost, let's say, $10 out of our $40. So we closed off at $130. Okay. So now we're working with a bigger capital for the day in a new day. So how can I put it? The risk will still apply. So 2% now of 130 is how much? There goes the Mets. The bundles are done. Gone.
That should be, I think, 2% of 30 is $6, right? No. It's $0.6. 2% of 30 is $0.6. If I'm not mistaken. Come on. Sorry.
How much is it?
That would be 2.6 actually.
Would it be $2.60?
$2.6.
Okay, I'll
Yes,
take that. My calculator is not even near me. So let's say, yeah, it's $2.60, right? 2% per trade. So of course, times by 3, that would be our maximum threshold. Now, ideally, if this whole thing works out, the same applies. If we have gains for the day, we know how much we're willing to give back to the market before. It's a safety, a break that we have in place for ourselves so that we don't find ourselves over trading and things getting out of control. So for me, this approach has worked wonders, I must say. And I think the only thing that I also didn't mention is that, yes, lot sizes, somebody might say 2%. Nah, shucks, man, it's not a lot. So 2%, I mean, I feel like I'm not going anywhere. So really, I want to work with a whole lot more. I want to risk, say,
the person should wait till he has $1 million and making 2% to evaluate a lot.
yeah, spot on, right? So somebody out there might say, okay, maybe I want to risk $10, right? So then that means now they only have, let's say they want to risk $10 a day, or maybe that's per trade. It differs. It all speaks to your risk appetite. But of course, if you risk more, that means also if you risk more in terms of dollar terms, your stop loss tends to be much more narrower, right?
Yeah.
But that risk reward ratio still needs to make sense. So it means, yeah, sure, if you're risking 10, you're going for 30. So of course, if all three, let's say you have 3 successful trades in a day like that, that's 3, 6, 9. So you've almost doubled your account in a single day with just 3 trades. It happens all the time, but understand the risk involved with using, a bit higher, or much higher rather, risk in such cases. But like I say, we will revisit this topic again in the new week, Tuesday. when we meet again. I'm going to be sharing, of course, I think I'll share 1 or 2 things with you on the group that will keep you engaged for tomorrow, because we did lose a day yesterday and I won't have power as well for 12 hours in the area. Tomorrow, apparently they're working on something. So I'm going to try and send some few things overnight that can, keep you engaged for tomorrow and over the weekend. And yeah, I want us to move with a bit of pace in the new week, start talking monetary policy, interest rates, and inflation, all that kind of stuff, so that you can, get up to speed with what's going on out there in the world and how to engage the markets. With that said, thank you very much, ladies and gents.
Yeah, thank you. And just to correct that, you won't get power, but you got shy always.
Yeah. Thank you very much, ladies and gents. I'll see you in the new week. Have yourself a fantastic weekend.
Thank you.
If there's any question, you know where to find me. Thank you. Take care.